Welcome to another premium update, this time a special edition. This video is going to get published on premium first and then in a few weeks maybe on YouTube as well. There's something very scary happening for MicroStrategy, now known as Strategy, the variable debt instrument that's supposed to be traded at $100 suddenly depacked. When a debt instrument depacks and it's not at the rate it should be, which is $100, this is not a good sign. Does this mean that MicroStrategy will have to sell all of its Bitcoin soon and crash the entire market with it? I made a deep dive into this because depacks like this are to be taken very seriously. Now, I got the idea of making a video on this topic by premium member John. A big thank you to him. By the way, he's doing very well with his trading as well, right? Maxi, he's in the top 3% of all traders. But this is about the Depack. What we're seeing here, this vertical line, this is when MicroStrategy for the very first time sold Bitcoin, so 32 Bitcoin, in order to pay for that variable debt instrument. The market does not like that. Even though the company subsequently bought way more Bitcoin, it doesn't like that MicroStrategy seems to be building something that resembles a Ponzi scheme. As in, we take capital today and then we just pay out the dividends with that same pool of capital in the future. This seems to be what's going on here. And so the big question is MicroStrategy doomed? Is the crypto market doomed? Or is this potentially a buying opportunity? When I see a chart like this, I'm very much reminded of a situation 4 years ago. This is when the UST stablecoin depacked. It went from $1 and then in the end to 0. And that was, by the way, the most viewed video on the entire channel over its entire lifetime. An early warning on the channel, and I hope that many people that watched that video at the time did not end up buying Luna or did not deploy more capital in the system, which, by the way, at the time was 18 billion in total value locked. So that was on the Anchor protocol. So this chart looks eerily similar to this chart. An instrument that's supposed to trade at $100 and suddenly doesn't shows that there's something systemic breaking. And you might remember, this year is when Terra Luna collapsed, when the UST stablecoin went bust, and the situation was extremely similar. So at the top, we've got the stablecoin market cap relative to the money supply. At the bottom, we've got the Bitcoin price, as in Bitcoin already declined by 40 to 50% before the collapse. And then the collapse just caused an additional decline of another 50%. We also used to have sidewards trading, no inflows, no outflows from crypto, which caused the initial price decline. And it seems like history is repeating itself again. We don't see any inflows anymore. Bitcoin's price has declined by 50%. And now there might be something systemic breaking. Now we have to look at the details, right? When we looked at Terra Luna, we saw this was an inflationary token. Whenever there was a depack, more tokens got issued, and that in the end led to the crash of the entire system. Now MicroStrategy, I still like to call it this way, it's set up quite differently. But of course, the market doesn't like the Ponzi-nomics. This year, again, was when Michael Saylor announced that he sold those 32 Bitcoin. And since then, BTC went down. Now let's have a look at those mechanics. The target is to get STRC to $100, but that's obviously not what's currently happening. Whenever it drifts above, Strategy raises the dividend rate. At least that's supposed to happen. And then that higher yield should attract new buyers. New buyers should price the drive up. So you can see that the mechanism is based on confidence. If the market is confident enough that MicroStrategy will survive long term, people should be buying at a discount, which currently is not the case, rather the opposite. Now here's the problem. Strategy is supposed to raise the dividend rate. But have a look at the dividend rate over time. Yes, we did have an increase over time because this is actually just a partial chart. When we zoom out, we already did have similar depacks, not the same magnitude, but also some depacks in the past. So Strategy was incentivized to raise the interest rate already before, and that did happen. But this time with the depack, it seems to not happen anymore. Now, when STRC is above par, above $100, it can simply issue new shares and then buy Bitcoin with it. When it's below par, then it should be raising the interest rate. When it doesn't raise the interest rate, at least the price discount inherently increases the return because the payouts are based on the $100 assumption, not on the current price. So at the current price of STRC, we have an inherent return of roughly 13% per annum. Now, you rarely hear me talk about investing in derivatives of Bitcoin, right? So Bitcoin miners or MicroStrategy or other treasury companies. I rarely talk about them because very often the risk versus reward isn't necessarily worth it. Most Bitcoin miners, for example, they tend to underperform Bitcoin most of the time. And also those kinds of debt instruments, while they seem safe because they're apparently pegged to $100 and because they do pay a high return, they are still connected to the Bitcoin price. That's the fundamental issue. When Bitcoin goes down, there's real downward pressure on STRC as well. And as long as Bitcoin continues to fall, STRC will have a hard time recovering. Now, you might have heard a few months ago that MicroStrategy raised money, so sold some stock for US dollars. So just as a US dollar reserve, not to buy more Bitcoin. So the reserve grew to 2.25 billion and then it paid off old debt instruments, reducing that reserve again to 0.9 billion. Now, the annual dividend that's currently been paid on STRC is 1.2 billion. The reserve now is 1.1 billion. Not that much of a runway. But there are two systems here, right? We've got the issuance of the debt, of this variable debt, STRC, but we've also got the issuance of stock. The stock issuance makes sense when the price of the stock is above its net asset value. So the amount of Bitcoin that strategy holds. When MicroStrategy's value is higher than the amount it holds, then it's incentivized to sell stock. Here, this is a simple representation of what's going on. People buy MSTR for the volatility, and equity or convertible equity is issued whenever MSTR is above net asset value. So that's a requirement to issue stock profitably for MicroStrategy. Now, STRC, so the debt instrument, that only issues when it's above the $100 par. We are very far away from that. Currently, the net asset value, according to strategy, is at 1.15. When I created this chart over here, which by the way is with Claude, we still had 1.21. So you can see how we're getting closer and closer to a potential discount line. This here, that's MicroStrategy relative to Bitcoin. So both prices compared. And this line over here, that's when we go down by 15%. And when we would lose the ability to buy Bitcoin through issuing shares. So one of the sides of the purchasing ending, the variable debt, right, the STRC, that's already gone because we are below par. Now, if MicroStrategy stock also falls by more than 15% relative to Bitcoin, then that purchasing engine is also gone. Then MicroStrategy cannot buy any more Bitcoin without burning money. And just have a look at that volatility. There is a very good chance that we fall below that. And so let's play with that scenario. Let's assume that MicroStrategy stock was to fall by those 15%. It cannot buy any Bitcoin anymore without burning money, so it's not going to do so. We still have our reserve, right? We still got our cash pile. How long can we pay the dividends of STRC with that cash pile, given we don't have any issuance anymore? That's what we see over here, the coverage runway. If there is no issuance and pure burn, the reserve would last for roughly 9 months. Now, what happens afterwards when the cash reserve is gone, the US dollar reserve? Let's talk about this in a second. But first, let's have a look at MicroStrategy's history of buying Bitcoin. So we've got the Bitcoin price over here. We've got the number of BTC that are accumulated at the bottom. There are different ways to count this in US dollars or as percent of all of Bitcoin or simply as the number that's now this filled area. We can see how MicroStrategy tends to buy high but not buy that aggressively when the Bitcoin price is low. And that makes sense because all the collateral, all the value in MicroStrategy is directly tied to Bitcoin. And so it's hard to lever this up even more when your collateral goes down. Imagine the following scenario. Let's say you have a house and you want to borrow against that house in order to do other investments because the borrowing costs are maybe lower compared to what you might get returned with those other investments. Now, if the value of the house is currently very high because everybody is hyped about property, you can borrow much more against that compared to when we're currently in a property crisis. And the same here with MicroStrategy. When the Bitcoin price is high, Michael Saylor can borrow more and thus buy more. When the Bitcoin price is low, he cannot. So his market timing structurally, unfortunately, can't be that great. His average Bitcoin cost basis is at $75,000. He's already in unrealized losses. Here's the Bitcoin stack that's currently in losses, and here's the Bitcoin stack that's currently in profit. He has levered up massively in the last 1.5 years. starting in November of 2024. And so here's the concerning death spiral. Let's say MicroStrategy stock falls by those 15% and then subsequently the reserve gets depleted, the US dollar reserve. Now MicroStrategy has to sell its Bitcoin in order to pay the dividends. And the lower the Bitcoin price is, the more BTC has to be sold in order to satisfy the STRC dividend payouts. Currently, we are at the stress level since STRC is below par and since we are only 15% in MNAV for the common stock or convertible issuance. As the price falls, the situation becomes harder. As in, maybe at around 50k, it depends on how much MicroStrategy sells off relative to Bitcoin, but probably at 50k there would be enough leverage that the MNAV turns negative, then there's no more buying of Bitcoin. Then the clock is ticking. Then the reserve is getting used up to pay the dividends for STRC. As we fall further in the price, more and more of the Bitcoin stack that MicroStrategy holds needs to be used to pay the debt. And getting to that price level isn't even unrealistic at all, right? The long-term holder realized cost basis is at 50k. And historically, we tended to fall 10 to 20% below that in a bear market. And the question is, how long will this bear market last? Will it just be a year, as it did in the past, or will it be longer? I don't have a good answer to this. But getting us to 45 or 40k even per Bitcoin is definitely a very possible scenario. It's just a repetition of a behavior we have seen several times in the past. It's nothing out of the ordinary. And so the fundamental question is, how much risk do we actually face with MicroStrategy? How likely is it that it's going to implode? How much run rate do we have? How much sensitivity to the Bitcoin price do we have? This is the chart that answers it all. Once we are at the 50k mark, we are in the zombie zone, as in MicroStrategy is not able to buy any Bitcoin. Everything above that is still okay. There's at least one instrument that MicroStrategy can use to accumulate BTC. Now what we've got on the x-axis, that's the Bitcoin price. What we've got on the y-axis, that's how long MicroStrategy can survive. In other words, the lower the Bitcoin price is, the faster it goes bust. If it's at 50k and the Bitcoin price stays at 50k for a long time and it doesn't recover, and MicroStrategy cannot buy any Bitcoin and it just has to sell its Bitcoin in order to serve all the debt obligations, the company could still survive for 25 years. But remember this convexity over here. The lower the Bitcoin price goes, the harder it is to serve those US dollar denominated debt obligations. And so that means the lower we get in the price, the shorter MicroStrategy can survive. If we go all the way to 23k per Bitcoin, which is unlikely, but still we want to play with the scenario, then the Bitcoin that's been held might not even cover anymore the entire obligations through STRC. We can see though that the stack is high enough that the survival is in the years, not just in a few months. We've got a US dollar stack that depletes quickly, but we've also got a Bitcoin stack that's much larger that will not deplete that quickly. But here's the thing, it's all based on the psychology of the market. If the market does not believe in MicroStrategy, then higher yields will not lead to purchases of its variable debt. And it will also lead to a declining MicroStrategy price. And so that's a fundamental issue. Crises like this can become a reinforcing issue. We saw the same with Terra Luna. We had a bit of a Depack of the UST stablecoin because of some trading on Curve Finance. That Depack was just a few cents and it was triggered through 100 or 200 million. That led then to a collapse of a DeFi protocol of 18 billion. The bear market case is not that MicroStrategy is running out of Bitcoin in order to pay its debt obligations in US dollars. Yes, it might run out of US dollar reserves, but there's a lot of Bitcoin left. But that Bitcoin takes many years to get sold off. The real bear market case is rather that people see MicroStrategy as a net seller of Bitcoin, not as a net buyer of Bitcoin anymore. And that happens at the 50k mark potentially. And then the rest of the market might be trying to front run those sales. So all of the propping up that we have seen of the Bitcoin price through Michael Saylor, that might then reverse and people might just front run that. They might sell their Bitcoin now and not wait for Michael Saylor to sell it in order to serve his debt. And when they sell in anticipation of Michael Saylor selling in the future, then that depresses the Bitcoin price. And how far it depresses the Bitcoin price then determines how solvent strategy will be long term. It's all hinged at the Bitcoin price and at the market psychology. It's the same with Terra Luna. Once we got a bit of a decoupling, people were worried. Will the issuance of the Luna token be strong enough in order to restore the price pack? And it did temporarily, but only temporarily. At some point, people thought, this is too risky for me. I'm exiting the market, I'm exiting the protocol, and then everything blew up. And if the same thing happens with Bitcoin, people say, this is too risky for me because Michael Saylor is just selling all the time, then this could also blow up the Bitcoin price. Now, this is not happening tomorrow. This is not happening next week. Again, there's still 9 months of US dollar reserves left in order to pay out STRC holders dividends. But we do see the market reacting severely to those 32 Bitcoin that Michael Saylor sold. He's got more than 800,000 Bitcoin. He only sold 32 Bitcoin, a tiny fraction, and the market is panicking because it set a precedent. It showed that it's not just the US dollar reserve that's running down, but that Michael Saylor is okay with potentially building this Ponzi-like structure. Now, why do I call this a Ponzi-like structure? It's because we just get capital and then we pay out the dividends using the capital that we just collected. And that's now happening on the same kind of denominator, right? We raise capital to buy Bitcoin, then afterwards we sell the Bitcoin again to pay out the capital. So the problem is not how long can MicroStrategy stay solvent given a certain Bitcoin price when it just sells its stack. The question is rather, once it starts selling the stack more visibly, not just 32 Bitcoin, how low will the Bitcoin price go? Because people exit the market because they are scared of future selling and then front run Michael Saylor's exit. Really, the 15% underperformance versus Bitcoin, that's the danger zone where the sentiment might flip completely. Because this time the market still somewhat recovered, right? We had the 32 Bitcoin that got sold, but subsequently, a few days afterwards, Michael Saylor bought many more Bitcoin using not STRC, but using again common stock and convertibles. That then poses the question, does it make sense to buy STRC at the discount, hoping for a recovery, given that the company is not going to blow up tomorrow or the day after tomorrow, given all of its Bitcoin? It definitely does not make sense to buy STRC for the yield, so for those 13% per annum. Would it make sense to buy it to at least bet on a partial recovery of the price? Yes, potentially, if we don't expect Bitcoin to now crash to 50K or to 40K. If this becomes the headline and everybody looks at STRC and sees how distressed it is, and then people exit, that's problematic. But I don't see that happening just yet. But it is very worthwhile to at least watch this number closely. If this goes down to $80 and to 75 and to 70 and even below that, then things look very dark. Then this is an early indicator of an upcoming Bitcoin crash. Because at least those debt holders, they don't believe that the market sentiment will turn around and that a rising Bitcoin price will bail out MicroStrategy again. This is not yet a Terra Luna type collapse, even though the mechanics are similar, right? We're selling something of value. In that case, in the old time, it was the Luna token. We inflate the Luna token in order to restore a pack. This can be similar seen now for MicroStrategy. The difference is that that something that can be diluted is much larger. It's many years of issuance. That was not the case for the Luna protocol. What backed the UST stablecoin just a few days after the depegging was already smaller in market cap than the market cap of stablecoins. And this is definitely not true for the debt that MicroStrategy issued. Let's watch STRC very closely. It's extremely important. If it does not recover, if it even falls further from here, this will be over all the news. CNBC, all the news outlets, they will be talking about it. They will then talk MicroStrategy's insolvency into existence. And that simply means that the Bitcoin price goes down, right? When people sell their Bitcoin because they're worried about Michael Saylor, then that becomes a self-fulfilling prophecy. That self-fulfilling prophecy, though, happens when Bitcoin falls all the way down to 40K, 30K, maybe even 20K. It does not yet happen at 50K. At 50K, just the dynamics are flipping from MicroStrategy being a net purchaser to being a net seller. That's only when the underlying dynamics change. But what matters is not the flows for MicroStrategy itself, it's the anticipation of the market of what MicroStrategy is going to do. If you're watching this as a premium video, then of course feel free to leave your comments down below, be this on the website or in Telegram. If you're watching this several weeks after recording of this video, then of course feel free to subscribe here on YouTube and feel free to give it a like. You can also join premium. Link to premium pops up here on the screen. There is a 7-day money back guarantee. In case you don't like it, just message me within the first 7 days and I'll refund you. No questions asked. See you next time.